Hello and welcome to Macro Mondays, presented by the Gokhstein News Network. I'm your host, Landy, and today is October 13th, 2025, and Bitcoin absolutely nuked to the downside. We had a massive open interest washout in the derivative side of the markets, hitting some really key levels for derivatives to the downside. And, on Friday, we were watching some of this occur, right? And it was the biggest open interest washout that we've seen in Bitcoin's history. And I had mentioned on Friday that, watch this low. It was a pretty strong low that was put in here on spot price. It did swing the lows over here, which was the daily area of interest. This then became a weekly higher low and a close. Now that has been swung, and I said watch for a daily low to be set. This is a reversal setup, but beware because we have that lower low swing on the daily. And I wanted to kind of point out that some derivatives, some derivatives pairs did come all the way down and hit the next big weekly level down here at around that $101,000 to $102,000. So you're going to see a little bit of wackiness. This is where I err on the side of watching Bitcoin spot price, specifically the Coinbase price, because that is where a lot of the custody is being held by the spot ETF APs. So they're just one of a few, but a lot of the actual coin movements are moving through Coinbase. Tends to hold up better and give you a better idea of where things are in terms of outlook for price action in regards to spot. And in this case, I wanted to double check a few things here before we really get rolling. And we're going to go over to open interest and see if we're getting, as Bitcoin has come up to resistance, we're not seeing a massive increase in open interest, about $2 billion in open interest starting to build up here on the top side, right as Bitcoin has run into the resistance here coming off the lows. We did have a nice move back down to test into the daily area. So you might recall that I mentioned if Bitcoin trades below the 112 weekly, pay attention to the daily levels around that, essentially 111 to 109 and a half, or just above 109 and a half. We did get a double strike right there on the daily levels. That is essentially this close over here to this high before putting in that 112 high of this prior consolidation and range that was going on over here. So we have now seen that liquidity grabbed. Bitcoin is now back up into the overhead resistance, specifically trading and closing back above 113 and a half. So setting that daily low. This is a higher low close with a lower low swing. This does mean caution, 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 because we could end up seeing a lower high if this area is not reclaimed. And in fact, it is, it's not out of the question that we see a lower high as it relates to the last higher high anyway, which is right around 124,720 with that swing higher high in at 126.3. So be aware of lower highs. Likely that leads to consolidation first, but if we start to drop the lows, that's where we start seeing lower. And in this case, we do see Bitcoin is right at overhead resistance, just below its basis band, which I'm going to show you in just a moment here on the daily. So, unless I see closes back above 118, I'm not looking too much further up, even if Bitcoin does mess around the 116 to 118 area. It's the same as when Bitcoin was over here and then came back down to the weekly and was heading back up. We need to see 114,750 closed above, then 116 to start looking at 118, and then close above there. We can entertain moves to 120 to 121. And above there, you can see that there is a fib here that I have pulled for a different, a little bit of a different range here. So if we go out to the actual fib pull, you'll see that this is a little bit different. So this is the prior cycle, and it's shifted a little bit, but we don't really need that one. The fibs here are not quite as important. There is a local fib pull that I'll show you here in just a moment that does have relevance to some of the areas that I'm going to be speaking about as we go on through the rest of this video. But in this case, above, that 118, 120 to 121, above there, shorts have cover all the way back to the highs, 123 to 125 essentially, and even now the all-time high. So we need to see closes above there to really start pushing shorts out. So it's just one level above, 123 to 125. They have very little cover back to the highs. And likely that's where we could see the 128 to 130 as a potential. But be aware of lower highs, especially in and around this area that has been very, very strong resistance, right? We saw the consolidation move to the weekly at 112, initial resistance on the daily before moving through to make that high at just shy of 125. And then a move right back down below 118, swing it, try to hold 116. It fails, go back to the weekly, find this area as resistance between 116 and 118. Went and grabs the weekly and the daily of the move out of the prior range, comes right back up, then back down to the weekly, then goes on through, and then right back down to the weekly, even swinging the weeklies and the new weekly higher low down here. So this is going to be very important to watch going forward. And if we do see a high put in on the daily, right now from right here, it would be on closes below right around 113.7, 113.5 on some derivative charts, which just so happens to be right around this area of initial resistance here. We saw that after hitting 116 to 118, this, and settling on the weekly, found it as resistance again, then found it as support here before moving on through. So right around 113.7 here for spot is where we would see a lower high paint. That would be your trend reversal setup of the bearish variety coming off of a trend reversal closing setup. But the caution is that we have the lower low, even though this is a trend reversal closing setup because we have the higher high, higher low close, we have that lower low swing. So be aware of a trend reversal setup on the other side around some of these resistances and really anywhere below the last higher high up here. Very likely going to put in a trend reversal setup for the bears. But this is where we can reference our Bollinger Band set, and we can see that we're setting up kind of a range now. We have high volatility within the bands, not outside of them. It would be outside of them if we did start to see around 106.5 dropped. I would say realistically with another closure anywhere around this resistance here between 116 and 118, that this is going to come in right to this low. So essentially if 107 is dropped, likely going to be below the lower second, targeting the 104 to 106, and you can split the difference there right at this higher low swing and close right around 105. If that area is lost, that's when we start entertaining trips down to potentially, 102 to 103. But realistically, that's where we could potentially see moves down to that 101 to 98, 225. And bulls really want to hold up there, to be honest with you. And start to make the weekly look really, really nasty and toppy. And likely threaten to resolve to the downside on expansion. But let's go talk about that weekly. And actually, you know what? Before we do that, let's go ahead and get rid of this, and then we'll go talk about the weekly. Let's go ahead and turn off the local support and resistance areas of interest. And not saying the bulls can't dig out here, by the way. They absolutely can, and there was a massive amount of open interest that was wiped off the board. And to be honest with you, we were so over leveraged in markets that would provide for maybe some fuel to go to the upside, especially if spot starts to bid hard. But if we were to take the prior larger move down of the range here, you can see that we're right at a 50% fib. And just overhead in that 116 to 118 area, just shy of 118, is a 618 Fibonacci retracement. So just be aware that below that area, we do have confluence even within the prior big move down of this wider range. So I want to see closes above there to give the bulls the opportunity to come back up to the top side. Again, we're looking right around 120 to 121. Above there, you can see there is an 888 that this candle actually rejected off of. And again, this was a pull from 124.5 to that 107.250. Perfect rejection right off that 88.8% there of the range. And then the bomb to the downside there to run the daily level and the weekly higher low close and swing over here. So this is a range look. And realistically, at this point, we need to see compression. And that is the higher likelihood from here, is to see compression before the next big move, meaning that this could become a macro ranging structure. And realistically, the next big breakout, either above the upper second or below the lower second, is going to provide for probably a much wider move on longer term timeframes in terms of volatility expansion. I'm not looking at volatility expansion from here, although it can happen. Price could absolutely rebound all the way back to the top side, take out, 127.5, hit that 128, start closing above 130 and go for more. Or, it could still go to the downside, drop the low, and then begin to get expansion to the downside. But usually from the daily, we see a little bit of compression before then. And we see price kind of hanging out either, between the basis, lower first, maybe even swing into the lower first, lower second zone, or start moving back into the basis upper first area, which would be closes essentially above that 118 and in and around that 120 to 121. And still we'd have to exercise caution there, as the weekly is going to be what tells the story here. I mentioned this on Friday. And I'm going to keep it short and sweet today. Friday, we came down and a perfect strike at that lower first standard deviation that has now moved up. Bitcoin did close above the basis band, so still in the strong half of the bands. You can see that right around 119 is the upper first. So getting above that 118, we're probably looking at minimum swings up to that 120, 121 area in lower term timeframes. Although we could see stall outs right there at 119, but a little less likely. But, because just above is where we have the 119.5 weeklies. Where Bitcoin initially pulled back to before dumping out, wiping out all that open interest and derivative markets. Spot, by the way, again, held up very well. 107 versus 101 in a lot of these derivative markets goes to show you how thin liquidity is. Even though there's so much money in crypto, liquidity is thin across the board, and it's spread out across chains and centralized exchanges, and it just gets really thin. And once it starts somewhere, it starts to wipe out all the rest. As price tries to keep parity across different centralized exchanges and perp dexes and so on and so forth with all the oracles and indexers. So, it can be a rough go of it. Understand the back above the upper second standard deviation, which is right at that high at 124.5. Then we are going to see the highs and likely higher. 128 to 130 is going to be the play from there, and close over close above the all-time high and the upper second standard deviation would provide for moves back to the top side in an expansive fashion on the weekly. This is very low volatility. And I need to stress this because the daily is going to likely go into a compression. And if it starts to break down on the daily to the downside, it could lead to some of these lower levels. And there's still levels of protection below before expansion on the weekly down to that 102, 103 area, just above that 101 to 98, 225 higher low on the weekly down there. But, beware if we get compression to expansion that starts moving through the downside towards that weekly, and then we start to see that and this low lost. There is, of course, the high over here. This is that 102.5 is right where that lower second is. That was perfectly struck in many cases, like on index, right? Don't want to see that dropped if you're a bull, because it'd be below the lower first, starting to get that expansion anywhere below there. That lower second, that'd be a bearish reclaim of that high below the lower second, targeting this low and potentially expansion lower. but the bulls still have the edge here in terms of setup. They still do. Even now, the bulls still have the edge in terms of setup. Bullish half of the bands, as long as this low side structure holds, especially on weekly closes, then the bulls still have the edge to the upside. Expansion is much more easy to do to the upside from here. And above that upper second standard deviation at 124.5, the prior all-time high right there, we would see expansion back to the highs and potentially higher. Be aware of a grind up though. Lots of hedges being taken out around highs, just like we saw over here. Big dump off, hedge, unwind the other side. In this case, hedge down, and then, unwind the spot side of the position, go long, hedge, unwind spot side, bring it down, and then hedge, unwind, hedge, and this was a liquidation event. So there was a lot of market participants in traditional markets that were left on the sidelines for this one because the primary liquidation event occurred after market close for traditional markets, and many wrapping up a lot of their stuff earlier on Friday. So beware of daily rejections that result in lower highs from here because of that structure, even though there's a trend reversal and a close for the daily, right? Even though the closing structure is a trend reversal setup, the lower low wick is the warning that we could potentially see lower highs, and lower highs are going to come in from here anywhere below on a close 124.720 and of course 126.3. But don't get super fearful. We could just run the lows. You want to see them hold if it does happen. And then we're likely going to see a compression as this is set up in more of a range than not. But, and a big but, and I will not lie, if the low is dropped, we're likely looking at, especially from here, seeing as the Tuesday candles open, wherever this closes, if the low is dropped and the lower second is dropped, very likely gonna drop down to like 105, and then anywhere below there, we're looking maybe 103.5, 102.5 area, but realistically, it's probably gonna run that 101 to 98.225. And if this low side does hold, the bulls can take control back in here on any compressions that start to expand back to the top side resistances and potentially through them. So that is my take on what's happening right now. I'm not going to get into any other alts. Bitcoin is what you want to watch. It was proven that Bitcoin is really the only one that has the real liquidity outside of, Ethereum spot and a few of the other majors in terms of spot. But when it comes to derivatives, even, we saw absolute a travesty when it comes to AMM ARBs and repricing as oracles and indexers were updating, missing stops and hitting liquidations and all kinds of stuff going on in such a thin with such thin liquidity across all these different centralized exchanges and perp dexes that watch Bitcoin. Where Bitcoin goes and how it recovers is going to really dictate how the rest of things recover. And it's going to take a little while for certain things. Now, some of the majors held up much better, especially on the spot side. So be aware of that. And I would look to Bitcoin and Ethereum as the spot leaders, obviously, because they have all that traditional market liquidity from the spot ETF side of things. So, yep, that's all I got for you today. I will talk to you again on Wednesday during the Wednesday check-in. And you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care.